Inflation has changed your taxes for 2023, and it could mean a little more take-home pay every single month. I invited the IRS spokesperson, Raphael Tulino, to come in and talk all about it. Hi, Raphael.
Hi, thanks for having me.
Sure. Okay, so tell me about these 2023 changes. And it's hard, I can't believe this is coming out of my mouth, but it's sort of a benefit for taxpayers this year.
Well, it will be. And a couple things to keep in mind. One, these are annual statutory inflation adjustments that are done every year. So every year right around now, you get adjustments for tax brackets and many tax provisions that are adjusted for inflation, as well as retirement vehicles such as your 401k IRA. So those are normal annual inflation adjustments. This year, they're both up more than we've ever seen because inflation is up quite a bit. The key thing to think about before we go back to that is this is for 2023 tax year that we won't file into 2024. So really, it's a normal thing, and it's something maybe you think about as you consider planning going forward in 2023, but definitely going to be a benefit for a lot of folks, depending on your situation, of course, and your complete set of facts and circumstances. But certainly it will help all of us, if you will, offset the inflation climate that we're in on our taxes.
Yeah, it's meant to, the way I understand it, it's meant to prevent what's called bracket creep. Is that correct? Like when people sort of start to make a little more money because they're getting paid a little more because of all of this inflation, but their cost of living hasn't changed any because of inflation as well. So it prevents them from creeping up into a higher tax bracket.
Right, exactly. And if you think of tax brackets are like a layer cake, right? A certain amount of tax, you owe a certain amount from here to from here. And what happens is this year, especially, it's up about anywhere from 7 to 8, 9%, depending on, but the brackets itself is just part of it. But yes, basically you're talking about increasing it enough where if your income, the level goes up, your income still fits into that lower bracket, so to speak.
Right.
And so, yeah, that's kind of what the old bracket creep, so to speak, in quotes is. And these inflation adjustments for the tax brackets, for many deductions and credits and things like that, have been adjusted based on the climate we were seeing here in 2022.
There's a couple of other important things I want to touch on for 2023 that I think are going to be important to everybody who is watching. The standard deduction also increased for 2023. What does that mean?
Basically, if you go back to the Tax Cuts and Jobs Act, that was the major law that came along before Christmas 5 years ago, 2017. That basically nearly doubled the standard deduction. It was taxpayers, you get to itemize or you take the standard, whichever is greater. The standard comes with whatever filing status you choose. This year, and just like every other year, that is adjusted for inflation. But that number went up, I believe, about 9% over last year, and about $1,800 married filing joint, $900 single. So already you had a lot of people who went from itemizing to taking the standard because the standard is now greater considering its increase from that new law. And now you have this inflation adjustment, which may even boost more of us to, or incite more of us to take the standard because our itemized don't add up to that number.
And then also I think it's important to people with their HSA, their healthcare insurance. Explain to me how that is new in 2023.
Well, HSAs and FSAs, same thing, they're adjusted up. So you can put more in one of those and set that money aside pre-tax to pay for your medical and dental expenses. So that is boosted as well. And those are important vehicles for a lot of us to use to pay medical expenses, co-pays, those kinds of things. And you get pre-tax. So you get a little benefit there where it's reducing your income by using one of these pre-tax. So yeah, good things, and the vehicle amounts have gone up.
And then the other part I want to talk about is the 401k, because I mean, I know right now people are struggling to just sort of pay the bills with all this inflation going on, but some people just get an automatic deduction into their 401k from their paycheck. So that is changing in 2023 as well in terms of how much you can put into your 401k.
So that one I know went up from $20,500 this year as the max to $22,523. So that's an extra $2,000 you can put into a 401k retirement vehicle. And then the IRA went up 500. I believe the catch-up provision is still 1,000, but there are a whole lot of other parts of the retirement vehicle community, if you will, that are seeing some increases as well. The 401k being the most prevalent. People have 403bs if you're a teacher or that kind of an educator, or 457. But anyway, all those plans you're seeing increases this year, and those help us put more money towards retirement, which in theory could lower the tax you pay because you're reducing your income that you're going to pay by the amount you put in your retirement. So yeah, it's a
Right.
good thing.
So speaking of 2023, I know a lot of people are wondering, are we going to see some improvements from the IRS when it comes to answering the phones, getting returns out in a timely manner? I know we had a lot of delays because of COVID and all of that, and now we are sort of pulling ourselves out of all of that. So moving into 23 tax season, for the year 2022, are we going to see any kind of changes back to sort of the normal IRS time response?
Yeah, I think so. I mean, fingers crossed, of course, that we're able to get back to where we were pre-pandemic. The pandemic really put us in a tough spot, not only with all the inventory of paper returns because we were shut down, and then the resources we've had a lack of, if you will, and then all that legislation we had to administer almost immediately, like Congress, really had us moving a lot of parts in different directions we normally didn't go. So yeah, I think we're going to get there and be a little more efficient. The law that came along just a couple of months ago that gives us a lot more money for resources is already starting to see some benefits in terms of folks who are being hired, and especially on the customer service side. So I think going forward, the plan is in place. It's not going to happen overnight. As you saw in the law, if you saw the commissioner say anything he has said, this is a 3, 5, 10-year plan of a lot of folks being hired and trained to do things, but customer service is definitely at the top of the list in terms of getting folks on board to answer the phones and provide the service that we all deserve from the tax collector here in America.
So you brought it up, and so I figure I should ask you right now. So because of all of that new legislation, you're talking about the Inflation Reduction Act that was just passed. In that, the government gave the IRS some $80 billion over the next 10 years for hiring purposes, for technology purposes, for updating the infrastructure, for all of those things.
Right.
And one of the things that was floating around is they're going to the IRS is hiring 87,000 new auditors to start auditing Americans. Tell me, is that true? Is that misinformation? What is the reality from the inside?
The reality of it, stepping completely aside from what you just said, because there is some political angle and political kind of nuances there. The money as we get it, and I don't know how we're going to get it because it's way above my pay grade as to how that's coming through from legislation and all the different things that are the machinations involved. But the benefit is going to be a more robust IRS for everything. And that includes service, that includes modernization of our IT, which is really needed. It includes, enforcement kind of things. But the 87,000 number came from a report that had us needing this number to close what is known as a tax gap, which is the amount of money that goes underpaid every year, estimated based on estimates that we have, and it's in the $400 to $500 billion a year range, of course. So we're going to need money across the board for everything. But the 87,000 number one is over 5 to 10 years. Who knows if we can get all those folks? It's not that easy just to hire people these days. Of course, there's lots of competitors out there.
Right.
And so there's that. And then the other side of it, you have a whole lot of folks within the government that can retire as well. So you got to replace people with people, and it takes some time to get some folks up to speed to understand and do the things we do and the nuances and things. So it's a whole big process, and it's going to take time. So we're still asking for, if not begging for, patience as we try to move forward to do the things we're supposed to do as stewards of taxes here for the IRS for people.
All right, Raphael. Well, thank you so much for your time and all of this information. And of course, I will link all of the IRS information for 2023 to my website. Thanks for being here.
Of course, anytime.